various different kinds of messages. It was thrilling to watch the match on Saturday, and it was really amazing to wake up and to see all the kind of celebrations that had happened across the country. I mean, it was spectacular. A World Cup coming home after 13 years, an ICC trophy after 11 years. Quite spectacular.
I think we went from those 20 minutes of South Africa winning to suddenly hearing fireworks outside the house, right? And I still remember my kids saying, why are we hearing crackers? And I'm like, I think India has won. So it was a 360 change in a very short period of time. So I think, weekend of pride, it was joyful. And of course, the markets.
But just finishing the last point. So I'm just so enthused about it. Samina, this is probably a rarity that there was only one team in the whole World Cup which remained undefeated. And that was India. All through, I mean, South Africa and India were undefeated. And this graph says it all right. Look at the number of flags, the number of teams essentially. There's only one colored flag because that's the only team that ended the World Cup undefeated. So it's a spectacular record of sorts that the Indian cricket team did this time. So bleed blue all the way through.
Brought the cup back after 13 years. And in other news, of course, it's Virat Kohli who steps down from international T20. So I think that was another moment of a little
Virat, Rohit, Ravindra Jadeja, Rahul Dravid.
And I'm so glad it happened with them stealing the cup in that sense, right? Or winning the cup and bringing it back home. So significant in every way or form. Well, that was, of course, what happened on the weekend. The week as well was very exciting for D Street. We eked out very smart gains. The first 6 months have been solid for the markets. In fact, before we go into the global markets, Niraj, it's actually been a pretty good first half of the year, right? The Nifty is up 11%. This month, with elections, we've still gained significantly. And we've also closed the week with gains of over 3%. Now, this is not an aberration because the rest of the world has done equally well. So you've had, barring the Dow, of course, the Nasdaq, the S&P, Japanese market, Hong Kong has seen some recovery as well. So a lot of the equity trades or equity markets in the world have had a pretty good run. India, of course, topping the charts in that sense. And I don't know if you want to comment on that one.
No, it's fantastic. 6.5% for the Nifty for the month of June. Mid-caps up 8% as well. The only question is, I mean, as it always comes, can we do more? So I think remains to be seen.
Or should we do more?
Should we do more? Yeah. The other big question to my mind, Samina, I don't know if you have some thoughts here, but does last week's SMID action, and while SMIDs ended in the green last week as well, but does that underperformance of the SMIDs relative to the large cap, relative to IT, and relative to pharma, set the stage for some bit of a time or a price correction at the mid cap and the small cap end of the market? I think that is something that maybe people would want to watch out for, because we did see marked underperformance from the SMIDs relative to large caps, relative to defensives like IT as well.
I don't know whether you'd attribute it to this, Niraj, but last week, while Friday's numbers showed that DIs were buyers and FIs were sellers, if you look at what's happened in last week in terms of foreign activity, FIs have actually bought equities worth 4,622 crores, while DIs for the week I'm talking about have also bought about 7,200 crores. Maybe the buying of FI coming back in could be a sign or a signal of large caps outperforming. So more than broader markets underperforming, am I just thinking large caps are catching up and hence you're seeing a slower catch up in that sense in the broader markets? I am trying to be the eternal bull that you are, but okay, nevertheless.
No, and very likely so, very likely so. So, yeah, okay, so let me define my version of the trade setup, and I'm sure Samina has some thoughts as well.
I'll just quickly finish global and then we'll come back to local markets. Okay. But talking about how well we've done on the domestic markets, it's actually been a pretty good setup for world markets as well. Wall Street very quickly on Friday ended flat. It was not too exciting despite near perfect inflation data. Inflation for the month of May came in at 2.6, for the month of June came in at 2.6% versus 2.7% that was seen. For May came in versus 2.67% that was seen in the month of April. Somewhere reiterating hopes of a rate cut, or for at least one rate cut by the Federal Reserve before this year comes to an end. The 10-year US Treasury also closed up 2%. This is after 3 weeks of decline. The dollar index finished marginally flat, still around levels of 102 on that front. In corporate news, which caught my attention because we've all grown up around Nokia, of course, today's world is all about Apple and Samsung. It was Inferna that's looking to buy out Nokia for $2.3 billion. So this was significant in the sense that when we think about mobiles as growing up, up, children or millennials rather, Nokia was what we all grew up to in that sense. So $2.3 billion sale is what we're expecting. As we go into the second half of trade, remember Wall Street, like I said, has had a good run. The Dow is up 4%, the S&P is up 14.5%, and the Nasdaq is up 18% in the first 6 months of 2024. What we are looking forward to in this holiday shortened week for Wall Street is the labor data. That's going to be an important trigger point once again, as traders and analysts will closely watch out for that reading in order to build in their expectations of a rate cut over the next couple of months. Across Asia this morning, it's muted. There's a slight negative bias, so you're not seeing fireworks in that sense. Japan, as always, looking okay. China, as always, trading flat with a slightly lower or a negative bias. Well, we've had some data come out of China. So you've had the Chinese manufacturing activity that's continued to fall for the second straight month in June, while services activities again slipped to a 5-month low. We're rather awaiting the PMI reading, not just for China, which has already come through, but Japan and South Korea as well. You've also got the Bank of Japan that will be releasing the Tankin survey, which usually helps market participants get a sense of what business confidence and activity looks like for the larger Japanese company. If that number comes in better than expected, you may see a further up move across Japanese markets in early trade. Well, that's the US and that's Asian markets. A quick word on crude and gold. Crude closed higher for the week despite the fact that inventories and demand has reduced slightly week on week. What the factor that has led to higher crude prices is the rising tension or fears of war between Israel and Iran. This big factor is also impacting the way gold is expected to trade in the near to medium term. So while demand may not look very solid for crude, it is the fact that geopolitical risk could dent supply for crude prices. Apart from that, gold, most people believe $2,600 is very likely on gold prices in the next couple of months. In this week as well, gold could be trading with a positive bias, especially if rate cut hopes do get elevated. So that's what we have for the world. Muted, lots of data coming in from Wall Street and Asia. Crude and gold with a positive bias. Equities as well, generally expected to remain consolidative, but with a very clear positive bias.
Yeah, and a lot of brouhaha around the French elections and French polls may have an impact on the European stocks.
The euro has actually reacted quite well this morning to that. So I guess the outcome was not as bad as the street was expecting, with a little bit of a reaction on the right wing. So you're seeing a marginal uptake on the euro-dollar pair as well this morning. Yeah,
but it'll be interesting to see. It's a bit of a complex story, viewers, so keep in mind. But may necessarily have too much of an impact on our market. So if the European stocks are a bit volatile over the course of the next few days, don't think of it as flow determined. More importantly, or more likely, it's happening based on the back of the French elections. But the trade setup for our markets, the relative performance of IT and pharma versus defense stocks, for example, does it show the bent of the market that it wants to veer a bit towards safety ahead of the result season as well as ahead of the budget? Could very well be the case. Now, from a Nifty-wide perspective, if you saw what happened on Friday, the 24,200 level seems to be a point of key resistance because selling was seen somewhere around those levels or near to those levels, and therefore that remains a point of key resistance with supports at various levels sub 24,000, depending on what chartist or what FNO positions you follow, really. But remains to be seen if we indeed see some sulking and some profit booking and some market heading to that. I mean, whether the Nifty heads to that level or whether it kind of, gyrates around these levels. I think it's a difficult question to answer, to be honest. What's easier is to look at pockets which might be showing strength or weakness. And if you look at strength, amongst everything else, city gas distributors just out there showing phenomenal price and volume action. Gujarat Gas, MGL, IGL, some very strong price volume action seen last week. They remain the favorite of some of the technical traders as well. We'll talk to our experts too about it. Let's wait and watch what these stocks do in the session today, but certainly something that you should have on your radar. And what you should be careful about is the auto sector, because two-wheeler stocks, for example, are completely coming off, whereas ancillaries, tires, are doing so well. Some of the other auto ancillaries have done so well. So there is a bit of a mixed bag. And Samina, especially in light of the fact that we're having the auto sales numbers starting to trickle in today, auto remains a sector that people would want to keep a keen eye out for.
Yeah, and especially with what we've seen on tire stocks on Friday. So auto ancillary, battery, lithium battery companies, those have been the smaller themes across the markets last week. But just point-to-point gains, and I think this stood out for me, from the June 4th lows that we saw on the election counting day, the markets, the Nifty is up 7,000 points. So that is the kind of one-way move that the markets have witnessed and seen. Like Niraj had highlighted in this early part of the conversation, large caps have been doing phenomenally well, and they continue to assume leadership in the markets. What you also want to remember is Bank Nifty, Niraj. I mean, while we don't talk about this often, and we've, of course, had moments of rejoicing the upward journey, Bank Nifty for the last 7 weeks has actually ended in positive territory. So it's, again, pretty much been a one-way move. This is what we talked about all towards the end of last year, where large caps got to come back in favor. Banks need to see participation. FIs are coming back, and that data is correlating with the fact that Bank Nifty looks good. Private sector banks are back in the game, and more importantly, it is the large cap that assumes leadership. So that's the larger market picture. But like Niraj said, auto stocks will be in focus from the get-go. Really, in the next hour and a half, we will have auto stocks that will start reporting numbers. M&M and TVS will be the two that I'd be tracking, but we'll of course highlight that for you in just a bit. In terms of other stocks that we have, like we said, every few days this theme remains to be defense stocks. This morning, two big order wins, one for BEL and the other for Cochin Shipyard. BEL has received a contract worth 3,172 crores from Armed Vehicles Nigam Limited. This is the total order worth is about 4,800 crores in FY25. So it's had a very good run in the last couple of months with regard to order wins. This one is a huge one, to say the least. As relative to its order book, the stock is expected to see a gap up in early hours of trade. Well, they've also guided for a strong order book. Their order inflow guidance stands at 25,000 crores in FY25. This is excluding the 30,000 crores of orders from QRSAM. The order book is up 25%, and of course, this order book that we've talked about is executable in the next 2 to 5 years. Cochin Shipyard, that's the other one. Last week belonged to Mazagon Docks on back of the Navratan status. This morning it's going to be Cochin Shipyard that will see some traction in early trade this morning. They too have signed a pact with Norway's Wilson ASA for 1,100 crore project. This is for construction of 6,300 TW dry cargo vessels. The project will be executed by September 2028. The stock will see a positive reaction on the 1,100 crore order win that Cochin has managed to bag. Apart from that, real estate is also going to be one space you want to watch out for. In terms of Godrej Properties, they've secured 11 acres of land for 1,800 crore for an 1,800 crore project in Pune. The revenue potential is quite significant on this one, so you will see the stock reacting positively. There is a developable potential of 2.2 million square feet. They've also guided for very aggressive pre-sale numbers, so you want to watch out for that. Their pre-sale guidance stands at 27,000 crores in FY25, which is implied at 20% growth. The stock had reacted well to that news flow, but of course with acquiring the significant land bank, you will see a further uptick in Godrej Properties. I know you'll come in on Signature in a minute, but just before I hand it over to you, two more stocks. Vodafone Idea.
I just thought on Godrej Properties, the other small trigger, Samina, might be that for all Mumbai-based players, that property registration in the MMR region rose about 12% in June to 11,000 units. So there's a bit of a leg up that might come into that as well. 12% is not as high a number as used to be, but still a decent number.
But also, Niraj, last week we did see real estate seeing quite a bit of buying, right? So I don't know whether that's in the price or not in the price, but we've seen good numbers, and I think the markets are very aggressively looking for newer themes. So this may be one space you want to track in early trade. We talked about Vodafone, we talked about telecom towards the end of last week on back of those much anticipated, hoped for price hikes. We had heard from Bharti and Jio. It's Vodafone Idea that has also, as expected, hiked prices or tariffs in line with the industry by 10 to 21%, which should be effective from the 4th of July. They've also said that they're planning significant investments over the next few quarters to further enhance the 4G experience and launch the 5G services. Just another quick one before I hand it over to Niraj is Amara Raja Batteries. This one was one of your top gainers in the first half of last week's trade on back of its deal with Goshen, which is a lead manufacturer of lithium batteries. On Friday, the management addressed a conference, post which the likes of Nuvama and Morgan Stanley have come out and upgraded the stock quite significantly. Nuvama has upgraded Amara Raja by about 20%, raising the price target to 2,000 from 1,420. So this one, once again, could be in news, but I think the day Niraj may just belong to auto and auto ancillary.
Yeah, but the other interesting piece was, Samina, one, that the guidance that the management gave us, Amara Raja, and two, what Morgan Stanley says that their notes, the price target is... Interestingly, their price target is 967, and they go on to say that they remain selectively overweight in the segment, but they prefer Exide over Amara Raja.
So they've actually not upgraded the stock.
Yeah, so they went ahead and spoke positively about it last week. I think you are right. But now that they've had the con call, I think they attended the conference call, and they're saying that they are constructive. They say that we think Amara now matches Exide on capability, but lags on customer wins and ramp up timeline. Thus, we remain, and other reasons. Therefore, they selectively remain overweight in the segment. They prefer Exide over Amara. Their target seems to be 967, which is a 42% downtick.
So it's. I mean, you've got a 40% downtick from current market price. So 967 in a Morgan Stanley. You've got Nuvama sitting at 2,000. So if traders are watching these reports and determining a trade, it's going to be a tough one this morning.
One. Yeah, most certainly. Yeah. Okay.
It's global versus local.
Global versus local. Yeah. Actually, I don't have too many stocks really, but the auto sales estimates and could be interesting. We'll talk about it in detail on Editor's Cut. But I think the two or three that stood out for me, and Puneet will talk about them in detail, but from the estimate perspective, seems like the two-wheeler stocks, Hero, Royal Enfield, will have a sluggish month-on-month and YOY reportage. And Ashok Leyland might have a strong YOY and YOY month-on-month reportage as well. So, therefore, from all of them, I think these three kind of stood out for me as having a clear consensus as per expectations go both on month-on-month and YOY basis. So, that's first. Borosil could be interesting. I think we spoke to the management last week, but on Friday, Carnelian Asset Management, Vikas Khemani's funds, two schemes have bought about 2% stake in Borosil at a price of about 318 rupees per share for Borosil versus 327 currently. So watch out for that one too. And Samina highlighted the newsmakers of last week, right? I mean, just keep an eye out for these stocks. Airtel, there's a price hike, but there was profit booking post that. But I think everybody's come out and hiked target prices on Airtel. Last week was Jefferies. Today also, I think one of the brokerages... You mean they
continue to hike prices on Vodafone Idea?
Nomura has a 1650 price as well. I think one more brokerage hike price. So Airtel is the first one. Wockhardt was up 5% because the key drugs saw some positive developments. It was a massive circuit in the sense that the quantum of volume traded versus the quantum of buyers, there was a big difference. And therefore, won't be surprised if Wockhardt has some more optimism today. Watch out for Craftsman Automation, highest weekly volumes and strong price momentum seen. And Tidewater, Samina, we don't talk about this at all, but Standard Greases, the promoter, have bought about 2% stake in the company. And the stock was up about 14-15% last week, so could be interesting.
Just a few more to add to that list. If we can pull up JSW Energy, it was in focus on Friday. And the news that we've woken up to this morning is they've received a letter of award for wind solar hybrid power projects. And this is under JSW Neo Energy, which is a subsidiary of JSW Energy. So you will see the stock see some reaction. It went home flat in terms of trade on Friday. Zydus Life Science and Orchid Pharma, the other two pharma names you want to track, smaller but nevertheless important news development. Orchid has partnered with Cipla to ensure the widespread and rapid distribution of the antibiotic Cefpime in India. This is a new drug which Orchid has launched and which has been approved for treatment of complicated UTI. We don't know the size of the market or the size of investment that Orchid has made, but this could be expected to move Orchid Pharma in early trade this morning. I don't know whether we mentioned Signature Global, but we've been talking about pre-sale numbers. Signature Global has achieved sales of 2,700 crores to date for the residential project Titanium SPR in Gurgaon. The total sales figures is expected to increase significantly after the finalization of the allotment. So in real estate, it's Godrej Properties and Signature Global. Both Godrej Properties, of course, has already moved on their pre-sale numbers, but on the land bank, they will see activity. Signature Global, of course, is expected to move on back of those pre-sale numbers that have been reported. Just one quick one, because we talked about this on Friday, is Sami Hotels. Remember, there was a block deal on the counter, and it was one of those few counters that didn't actually sell off post the block deal. The price that the block deal took place at was at the closing price of Thursday. And the good news is some very good hands have come into Sami Hotels. GTI Capital had sold 4.74%, but this was picked up by ICICI Prudential, Morgan Stanley Asia, and Abu Dhabi Investment Authority that bought about 2.9% share at the same price. So whatever supply came into the market got lapped up pretty swiftly by very solid hands, and that could explain why Sami actually gained post that block deal. So that's what I have. But yeah, the season of block deals is upon us. Today, for a change, we don't have too many block deals that we're tracking.
Yeah, but watch out. There's some rumor about Havells coming out with a block on Havells coming soon. So that's something that we'll keenly watch out for as well.
Just a quick one. I think we had MOIL price hike that came in, about 9 to 10% this morning. That's news has just come in. The stock will see a reaction. We will, of course, highlight more of that shortly as we go along the next couple of hours. Great.
Okay, well, let's move on to the editor's cut today. And Alex, we speak about two rate-sensitive pockets, if you will.
Absolutely. In fact, let's talk about, and let me spell it out. This is, of course, the editor's cut. This is where we get beyond the headlines and we bring you the latest stories. And we're talking about the banking space, because if you look at the performance of the Nifty Bank over the last month, then you will notice that it's up as much as 7%, and that's quite a move. It did hit an all-time high, and we'll talk about what is pushing the Nifty Bank higher. But we'll also talk about auto sales data, because today, of course, is auto sales data release day, and you'll see quite a few of the top, in fact, most of the top companies release their data for the month of June. Take that with a pinch of salt. This is wholesale data, remember. This is the metal that gets pushed from the factory to the dealerships. But there are insights that Puneet has picked up that will give you a sense of how retail sales are also panning out. And it's not looking like a very pretty picture, Puneet. Yeah. It's going to be a tough month for the auto pack.
Yeah, definitely. I think a couple of factors which have affected this. One is, of course, the heat waves which are there at the start of the month, of leading to lower footfalls as well. And the other factor that is contributing to this is, of course, the absence of any kind of wedding dates. So there hasn't been much footfall, as well as macro factors which is leading people to get into dealerships as well as talk about the products as well. And I think one thing that you highlighted, which was on the IMD SkyMed data
in the morning, correct.
So we don't see any kind of rural pivot in this particular month as well, and that's what's reflecting in these particular numbers. So
in fact, in case our viewers missed it, the IMD has gone ahead and said that the monsoon in the month of June was below normal, as opposed to the previous projection of normal. And of course, it was expected that it would be a little bit lower in the month of June and would pick up in July and August, but seemingly whatever we've received was lower than expected.
Yeah, definitely. And I think what's interesting is the pockets that, they are showing outperformance. For two-wheeler specifically, we are seeing TVS being one of the key outperformers this month. Roughly 10% sales growth expected. But one of the other factors is that it's getting a lot of competition from someone like a Honda in the premium space. So TVS is going to be, although one of the highest growth expected in this particular counter, but it is getting competition from Honda in the premium space. Or for Bajaj, it's getting a lot of competition in the 125cc space, where they've launched the Pulsar in this particular calendar year as well. Over the last 12 to 18 months, it has performed very well in this particular space, but now all kind of supply chain issues, which analysts are pointing out for Honda, have finally been resolved. So that's one of the key things. And for Hero, we spoke about, the rural part where the recovery hasn't happened yet. Yeah. So probably will happen. We will see some more commentary. This is the last month of the quarter first. And Royal Enfield again continues to be subdued, which is a very surprising trend, because when this started in financial year 25, April was the year where they crossed 80,000 sales units, which was the target and expectations for per month. But this month is expected to be around 68 to 70,000. So wow. That's a key challenge, and a lot of questions will be posed to the management post the quarter one as well, as to what has led to this particular fall in May as well as for June as well.
In the four-wheeler space, two companies, Maruti Suzuki and Tata Motors, looking a little soft in the month of June, but M&M looking good.
M&M, continuing its outperformance in this particular month as well. The 3XO launching and getting so accepted very well. Interesting is the waiting period, which has been pointing out now. Like the entry level segment at 7.5 lakhs has 32 weeks of waiting period in a place where
is this unheard of?
It is unheard of because we are not seeing...
Not for Mahindra.
Not for Mahindra. That's right. But especially with the kind of availability and competition from someone like a Tata, it's very... and, the top variant has 10 to 12 weeks, which, competes with the other SUVs, such as in the 13 to 15 lakh range as well. The Nexons of the world, they have XUV 700 as well as one of the products. So, very surprising that kind of, the charm of this particular product.
But it has been pointed out that Mahindra & Mahindra is going to have to plan its supplies better, improve its supply chain management, because frankly, with the kind of options available in the SUV space, there's not going to be a lot of people with the patience to wait for more than...
I know this is not an M&M conversation, but it's a very attractively priced product. Are there others in that price bucket as well for the features that they give?
I think definitely Tata Punch would come into mind, but that is slightly not at the 7.5 lakh range, but definitely in that range. And when you compare the other two products, the Exter, which is at the 6 lakh price range, the 3XO offers much more features, much more to the consumers. And that's only a 1 lakh price range above. So 6 to 7 lakh is what Exter is at. 7.5 is where Mahindra 3XO starts. So that's, I think, they're competing with, a really big competitor in Mahindra, and it's giving consumers something more at a price which is something very less.
Okay, so very quickly to wrap up, commercial vehicles, it's looking like a decent. Is it decent?
Yeah, it is a decent one. But just one point I wanted to add for passenger vehicles.
Sure.
Very, very interesting that Tata's has actually reduced their discounts while Maruti has increased their discounts. So that's one thing that we will watch out for what's right, and of course how the performance of Switch. For commercial vehicles, you're right. It's as Niraj pointed out, for Ashok Leyland is going to be a good month. And it's very heartening to see the 15,000 monthly target that they are meeting. They had guided for this. The sales of last year was roughly at 1.97 lakh units, which was last achieved in FY19, where it was the high of this particular industry. So they have maintained that they will be looking at much more, in this particular area. What's interesting is the 2.5 to 3 ton, the LCE market where Tata is strong, the EV hasn't picked up. That's what brokerages are saying. They are saying that, from which they get the Switch mobility, that hasn't ramped up yet as per their expectations. So they will be, of course, a little more commentary on that. But Tata, the Ace EV, has already sold 5,000 units.
Okay.
And speaking to, NDTV Profit, they did mention that as well in the media briefing.
Fantastic. All right. So that kind of gives us a perspective of what to expect in the auto sales number. But let's jump to the banking space, which, as I pointed out at the start of this conversation, has been buzzing. Nifty Bank hit all-time highs.
Yeah.
But there are a few key contributors.
Yeah, but also, Alex, relative to Nifty, month on month, point to point, the last 1 month, the Nifty Bank has underperformed the Nifty. Right? But 2.67% point to point, not from the lows, versus the Nifty about 3.5%. And some of it could well be because of what's happened in the last 3 days, that there is a bit of underperformance that is happening there. Now, what we are trying to do at this piece is one, try and talk about what happened in Q4 with some of those. So the point number 2 on the graphics that I've sent, which speaks about the growth being strong in Q4. And I've chosen the large banks here. And the metrics, loan growth as well as deposit growth. So if you look at HDFC Bank, the much spoken about HDFC Bank, the loan growth was just about 1.6%. Whereas the deposit growth was strong for them. But relative to almost all the others, you look at an ICICI Bank, 2.7% loan growth, deposit growth about 6%, or an Axis Bank, 3.5% loan growth, 6.5% deposit growth, or a Kotak Bank, which far outstripped HDFC Bank at 4.6% growth and 9.9% deposit growth as well. SBI had a fabulous loan growth, even if the deposit growth was a bit shallow for them. The point being that it is not the one which is setting the stage on fire. On various metrics, there are other banks which are doing far better than HDFC Bank. So point number 1 is that, whereas HDFC Bank is, in terms of, because it's a high-weighted stock, led the rally in the Bank Nifty until the last 2 days wherein everything has come off. So the question that comes in, now that a part of the re-rating has happened, what can drive further re-rating for all of these banks? So, three key triggers for banking per se: deposit growth, and whether that will continue to, whether that will be sluggish or it will show some uptick. And there is competition, serious competition for banking deposit growth from the mutual fund industry, from other private bonds, etc., and stuff like that, and rightly so.
Yeah, and NBFCs as well.
NBFCs as well, right? So, and rightly so, Alex, as you talk about it on your personal finance show so many times, right? Sure. Why should people have money only in FDs?
Yeah.
There are better options out there. FIs coming back. In some sense, FIs have come back, and therefore the preempting of that rally happened until the last 2 days. You know, the last 10 days of June, banks had a great move before they cooled off a little bit. And whether there is visibility on margins bottoming out. Now, you know, that's a bit of a concern, simply because everybody believes that NIMs at some point of time will get compressed over the next 12 months. When do the rate cuts happen? Anybody know? Anybody's guess. But could the NIMs come under a bit of compression, and therefore will earnings come under a bit of an issue? Now, people like Helios and some others are saying it won't happen, which is why they're launching a BFSI fund in the first place. So that's the other counter argument. And for specific stocks, there are concerns. So Kotak, the leadership overhang, the RBI embargo, so that stays firmly in place. For HDFC Bank, NIMS improvement. I mean, we're talking about the need for a NIM improvement for HDFC Bank for a really long time. Will that happen is the key thing. Even for Axis Bank, by the way.
And retiring of high-cost deposits, they're going to have to do that over a period of time. Certainly HDFC Bank. And all of this bears watching when the earnings begin. And it's not too far away, I must point out. Let us know what you think about both the conversations.
No, sorry, Alex. Just before we wrap up, just one piece. That while we spoke about the concerns across various banks, the two which are slated to actually show a really good performance and a bit of a Goldilocks period, ICICI Bank and SBI. Very strong margins for both. Benign credit costs for both, and if indeed corporate capex were to pick up, then here's a set of banks which are equally well placed both in retail as well as corporate side to take advantage on the back of benign credit costs and good margins, and therefore good loan growth. So it might well be that the leaders of the pack here on might well be ICICI and SBI.
Which is why a lot of people continue to have buy ratings on both those counters. That is the sum and substance of what we've spoken about on the editor's cut. But let us know what you think about both the chats that we've had. And stay tuned. We've got more lined up on the other side, specifically to do with the F&O space.
Welcome back. This is India Market Open. We're taking stock of the futures and options space. It was a great week where we in fact made new life highs for the Nifty, the Bank Nifty, and even though on Friday we closed marginally lower, that was also another day where we in fact saw the Nifty move into, well, uncharted territory. Based on that, let's take a look at how futures and options are panning out right now. Of course, about 1.7% increase in open interest towards what looks like longs, despite the fact that it eventually closed in the red. The Bank Nifty took a knock of nearly 1%, and that's where we really didn't have too much change in OI. Now we move on to the options market, and naturally, given the fact that the Nifty has moved higher and sustained above levels, well, we're starting to see a lot more writing around 23,900, 24,000, 24,100 in terms of puts, and a lot more writing calls around the 24,500 mark. So we do have considerable amount of put open interest around the 24,000, and that would perhaps also serve as a little bit of a base in the near term. And on the higher end, of course, we can see the 24,500 level offer a little bit of resistance as we move into trade over the course of the next few days. Now let's talk about stocks, and again a lot buzzing on, well, advances, even though the advances were not significant. We had GNFC, PNB, SAIL, all of them looking at fresh longs. Polycab, on the other hand, did see some weakness coming through, and of course, besides that, we're also watching out for stocks which saw unwinding, short covering for the likes of Tata Motors, Grasim, as well as Reliance Industries, along with, of course, India Mart. So these are a handful of names that you need to keep in mind as we move into trade today. But the question really is that what do you do with benchmarks? Well, we have Milan Vaishnav of Gemstone Equity who's joining us on the show. Milan, good morning. Thank you so much for joining in. Let's start with your view on the Nifty, and what kind of option structure are you employing here?
Very good morning, Agam. See, markets are in a structural uptrend, and there is no debate on that. We have had a wonderful last week, and even on a monthly basis, we have posted gains of almost 6%. I mean, just less than 1,500 points we have gained in the month of June. But looking at the current technical structure, as I just said, that there is no doubt about the structural uptrend absolutely in place. What I'm uncomfortable here is the way Nifty has run up much ahead of the curve. I mean, when I say much ahead of the curve, what I'm trying to say is that it has deviated quite a bit from its mean. Even if we take the fastest or the shortest 20-week moving average, we are trading 1,400 points above that level. And if we talk about 50-week moving average, we are almost 2,800 points above that level. So even if there is a slightest mean reversion that may take place, then we might see some violent corrective moves from higher levels. So what my view on Nifty is that right now we have to keep traveling with the trend. Of course, there is no doubt about that. But at the same point in time, we need to be extremely vigilant and mindful about guarding profits at higher levels.
Right, Milan, so based on that, you're expecting range-bound move for the Nifty? And if that is the case, what are you doing with options?
Even in the best of the case, I don't expect Nifty to once again give a runaway kind of up move above 24,200, 300 odd levels. So this week, I would be going in for a strangle. I would be selling 11th July call, 24,500 call, and I would be selling 11th July 23,500 put for a premium of around 3,081 rupees. So that's how I would like to go for a strangle. We would be realizing around 120-25 points here, and we can expect a yield of around 4.8% on this trade. And as a part of risk management, we would exit if Nifty ends up either moving past 24,500 or slipping below 23,500.
All right. So that's the short strangle that Milan is deploying as far as the Nifty is concerned. With Nifty currently at 24,000, he's selling the 24,500 call and the 23,500 put. And of course, should we see the Nifty breach any of these marks or perhaps even try and test, that is the time to exit. And of course, we already know the kind of premium that you are making on this one. But that said, Milan, you also have a view on ONGC. Can you tell us about this one as well?
Yes, I do have a view on ONGC. I am seeing some lead indicators showing strong bullish divergences on this stock. So I would like to go with a call spread for ONGC where I would buy 280 call and sell 300 call. The net premium that I would pay would be close to around 5 rupees. Maximum profit we can expect on this trade is 28,700 and maximum loss would be at 9,700 rupees. As a measure of risk management, once again, we will go with levels of 264 as a stop loss.
A straightforward bull call spread as far as ONGC is concerned. And remember that the entire oil and gas sector, specifically names like ONGC and Oil India, have been advancing, showing a lot of strength. And of course, I reckon that Milan is banking on ONGC at this point in time. But on that note, Milan, taking a moment to thank you for joining us and taking us through your views on the markets and of course giving us a couple of option structures to work around with in these markets and the current environment. With that, it's over to you, Samina.
Thanks, Agam, for that. That's, of course, the trading calls and strategies coming in from the F&O desk. Quick check on implied Nifty before we go to Soni Patnaik, who's ready with her trade calls as well early Monday morning. It's a flat start on D Street. This comes in after Friday, so the last half an hour of trade see the markets decline after holding out quite well for most part of the day and the week. We've come out of a week with the Nifty gained over 3%, going into and starting off a brand new quarter and a brand new month as well. Soni, good morning. Thank you very much for joining us. Last week was pretty solid for the markets. The Nifty was up 3%. We closed out quite well at 24,000 on Friday. As we go into trade this morning, would you use any dips as a buying opportunity? And when I say dips, I mean a 20 to 40 point downtake on the index could make a good entry point, you think?
Hi, good morning. Thank you for having me on the show. I think you've rightly pointed out maybe a dips can be used as a buying opportunity. Perhaps not look for a 20 to 40 points down. If any dip is around 23,800 or so, then that dip can be utilized to get into a buying zone. It's a very good support of 23,800 followed by multiple supports that can be seen around 23,600, 500 and so. Right now, the rollovers point of view, Nifty has witnessed a significant long rollovers. However, there are some parameters which are entering into overbought zones, such as your technical parameters of RSI, put call ratio. These seems to have touched that overbought zone. It's just wise to wait for that small dip to come in. You may not see a lot of price correction from current levels. There could be time correction that can come into the picture. However, if the dip is around 23,900, 23,800 zone, it's wise to reinitiate longs from those levels. And from there, it can bounce back again towards 24,200 plus levels.
Yeah. Soni, how do you feel about Bank Nifty? There was a little bit of underperformance in the second half of last week, but no surprises. You know, we were anticipating consolidation after a pretty good run that Bank Nifty has seen as well. 7 straight weeks of gains. This morning, if Bank Nifty does see a flat start, would you initiate a fresh long?
I think absolutely, because Bank Nifty still holds out to be stronger than Nifty, even in terms of the rollover analysis. It has seen lesser than average, but then there's a lot of short positions that have gotten squeezed out of the system. So Bank Nifty is initially sitting at just fresh net longs. There's very good support of 52,000. As long as 52,000 level is getting defended, Bank Nifty can bounce back from those levels and retest the all-time highs of 53,000, 53,200. Any fresh breakout above 53,200, Bank Nifty can head towards 54,000 as is indicating in the options metrics. Also, a lot of private banks have seen very strong rollovers. So they are yet to continue to contribute to Bank Nifty in that sense. We can see Axis Bank, ICICI Bank, they've shown very strong rollovers on the longer side. So it's not just going to be a day's move for Bank Nifty. It can be a positional play for Bank Nifty and hold on to the levels and hold on to the support levels. Bank Nifty is certainly to bounce back from current levels and make new highs in July series.
Your top pick, Sony, this morning?
So for today, it will be a balanced approach, a buy and a sell. And the buys trading idea comes in from Trent. Trent has seen very strong rollovers of 97% from June to July series. So one can buy in futures at current level, keeping a stop loss of 53.80 and a target of 5600, 5650 can be seen. The sell idea comes in HDFC AMC, which has broken below 4,000 level on cash levels on Friday. So I think from current levels on futures, one can sell HDFC AMC, keeping a stop loss of 40.70 in futures and a target of 39.40 can be seen.
Specifically, I want to get into one stock with you, Sony, before we go into the stocks to watch in today's trade. And that's going to be Amara Raja Batteries. A very good run in the first half of last week on news flow that they've had a tie-up with Gotion, which is Japan's leading lithium battery manufacturer. This morning, we've woken up to two brokerages, Nuvama, which is a 2,000 price target, and Morgan Stanley, that's constructive and excited, and hence has a price target which is 40% lower than Amara's close on Friday. Where do you think the bias sits on Amara Raja Batteries? And technically on the charts, are you constructive on this one?
Absolutely, Samina. We can see that it has given a very good breakout. Like maybe 3 days ago, that breakout had come above 1540 levels. It is still holding above those levels. So anybody who's already holding at lower levels can trail the stop loss to 1540. For fresh entry, 1660 to 1630 can be the range where one can initiate the longs, keep a positional play stop loss of 1540. The stock can retest 1800 odd levels again. Any move above 1800, you can see it heading towards 1950, 2000 levels, which will be positional play. So hold on to the stock with a trailing stop loss of 1540.
Okay. Now, you know, the thing about Amara Raja, viewers, and me and Samina were talking about it in the morning at about 8, 8:10, 8:15, is the kind of dichotomy that brokerages have over this. And I'll read out something from the Morgan Stanley loan. Maybe Samina will highlight what's happened in the Nuvama. But Morgan Stanley, for example, is saying that they attended the conference call on the recent tie-up, and the gist is that they believe that Amara now matches Exide on capability but lags on customer wins and ramp-up timeline. Financial returns on the lithium battery business are still not clear. Thus, we remain selectively overweight in the segment. They prefer Exide over Amara Raja. So, fundamentally, this is a verdict that Morgan Stanley is given. I mean, don't even ask about the target price. That's at 967, which is a 42% downtick. But, Samina, very interestingly, while Morgan is not so constructive, Nuvama seems to be constructive?
Very constructive, but just quickly to add on to Morgan Stanley, on 12th April, they aggressively upgraded Exide. They raised the target price to 485 from 373. So I don't know whether this is about not preferring, whether this is not liking Amara Raja or liking Exide a bit too much in the case of Morgan Stanley. But that's the story on Morgan. Nuvama, on the other hand, as much as Morgan Stanley is very not constructive in terms of a stock price, Nuvama has come out with a very aggressive price hike increase on Amara Raja. They said that post the conference, this is the takeaways from the conference, they said that the fact that Amara Raja signed a technical licensing agreement with Gotion, it's a huge positive. Gotion, member, is a top 10 global lithium battery makers. The tie-up is for LFP cells for both auto industrial applications. The tie-up would propel Amara's plans of 16 gigawatts capacity over the next 10 years. They also said that they're raising the fair value of lithium business to 1,100 rupees a share versus 532 rupees a piece, and hence they've increased the target price by 20% to 2,000 rupees, which is versus the close that we saw on Friday. So very, very strong upgrade note coming on Amara Raja from Nuvama. On that note, Sony, we've talked about Amara. How do you feel about Exide? Is that something you like? How does that one look on the charts?
Excite, definitely. I think it has also seen quite decent rollovers above 90% on average. It is consolidating now because that breakout had already come above 520 and it moved significantly towards 600 or 20. That 100 points move already came. Now it's just consolidating. The short-term consolidation range is from 550 to 580, 85 odd levels. So any fresh upside in Excite can only be seen if it's able to recross the 585 immediate resistance above which it can retest 620. So I think that's the level to watch out for. And on any case, if 550 on a support breaks, you can see some profit booking taking place again towards the 520 odd level. So I think that consolidation range remains quite critical right now. It'll be a wait and watch strategy from current levels.
Well, that's a lot of views on stocks, specifically both from a technical and a derivative perspective. But there are more stocks to watch and trade today. We've discussed a few. Rucha joins in with some more which could be potential movers in this morning. Rucha, good morning.
Good morning, Niraj. Thank you. So I have a few stocks on my list. I'll start with Aether Industries. Now, this company has commissioned a 5 megawatt solar power project. It has commissioned and started operating this project. Now, this is out of the total of the 15 megawatt order that the company has received. And how will this affect the financials? It will add around 6 crore to its bottom line, and this project is expected to be completed in the current financial year itself. Now, this 6 crore implies around 7% of the net profit that it posted in FY24. Next on my list is MOIL. Now, this company has hiked prices of ore with magnesium content more than 44%. Now, the price hike for this category is around 2%. While talking about the ore with magnesium content below 44%, the company has reduced the prices by 8%. Now, this revised prices will be effective today. Next on my list is Bharat Electronics. Now, this stock will likely be in focus today because the company has received contract cumulatively worth 4,800 crore around, and out of this around 3,000 is from Armored Vehicles Nigam Limited, and around 400 crore is for meteorological equipment. Now, talking about the order book inflow in the current year, the total order inflow was up around 25% at 76,000 crore, out of which executable for the next 2 to 5 years is out of which around 20% is executable in the next 2 to 5 years. So this is what we have on the stock radar today.
That list is pretty extensive. Lots of stock movers. There'll be sectors as well that will be in focus. Auto stocks will be on top recall this morning on back, of course, of auto numbers that are expected to start trickling in from the get-go this morning after markets open up. Sony, before I go into auto, we've talked about battery. I want to pick your brains on what you're making of tire stocks. The rally was obvious on Friday across the board. As we go into trade this morning, are you anticipating follow-on buying, potential for any more money to be made today in the tire stocks?
Certainly. I think the stock that stands out would be Apollo Tyres, which has actually seen a very fresh breakout on charts, as well as a 93% long rollovers from June to July series. The stock still has a lot of momentum. The breakout has come above 530, which is quite strong. So trail stop loss to 530, one can hold for higher targets of 560, 565. And if that level were also to break, the stock can head towards 600 in July series. So that's a very good risk-reward ratio, favorable, and one can certainly hold with a 530 stop loss, trailing it and hold for higher targets.
Okay. Yep, tire stocks certainly doing well. But speaking of autos, keep in mind that the monthly sales numbers start trickling in. In the next 10-15 minutes, you will probably see numbers from 2 or 3 companies coming out, including maybe Bajaj Auto. So I think keep an eye out for that. Remember, the two-wheeler names are not expected to give some very good numbers. There is a table that we have of the 4 or 5 key ones, wherein the month-on-month and the YOY numbers are shown. Expectations are shown actually. And you probably see very weak performance from a Hero, maybe even a Bajaj Auto, Royal Enfield. Look at that, 4.5% month-on-month downtick, 11.8% YOY downtick. Hero as well, month-on-month about 15% downtick, YOY 3% downtick. The ones which are probably expected to do well, Ashok Leyland with a 7% uptick month-on-month and 3% uptick YOY. So interesting to see what happens to some of these auto names. But Sony, I will come to one of the stocks that Rucha highlighted in her list, and which is BEL. Now, defense names largely have been sluggish the whole of last week, but the order flows keep coming in. BEL might actually have a slightly positive reaction today as well. Do you reckon there is some steam, or is there a trade that you could possibly take into a Bharat Electronics if it starts off marginally higher today?
Niraj, BEL right now it is holding on to a good support of 300 as per the derivatives parameter. If it were to continue defending this support level and take out the resistance of 312 or so, then a fresh long trade can be recommended from those levels, from where it can retest the previous all-time highs of 320, 323 levels. I think that's very important to cross. That resistance of 310, 312 is very important. As of now, 300 is a very good support. If it breaks, you can see some difficulty, some profit booking towards 285 odd levels. I think that's going to be very crucial. So these resistance, only if it breaks, one can initiate the longs only after the resistance breakout.
Right. Sony, couple of more stocks, but I'll start with Vodafone Idea and the telecom pact. Very contrary to what we have anticipated, is after the tariff hike, telecom stocks actually have sold off in trade. But I know there have been enormous number of brokerages that are not just constructive on Bharti, but also Vodafone Idea. On both those counters, I'll talk to you about Reliance separately, but on Bharti and Vodafone, what are the charts indicating? Could this week see an uptick on those names?
I think the sector has seen good rollovers on the longer side. However, if we talk about individual stocks, Idea especially, the stock has some resistance around 19.2. On weekly charts, it looks strong. It can break out. However, that 19.2 resistance is going to be a bit tricky for it to cross. The moment it crosses that, you can see it heading higher towards 22, 23 odd levels on a positional basis. Immediate support for Vodafone Idea can be seen at 16.8, which is quite strong for the week. I think it may consolidate, and ultimately after the consolidation, it will try to break on the upper side of the resistance. Talking about Bharti Airtel, the stock has quite seen a strong formation on charts, and it can head higher towards 1500 as well. So I think stock has a good support of 1410. One can continue to hold with 1410 as a support stop loss. The stock can bounce back again and retest the high levels of 1500.
Right, that's the word coming in on telecom stocks. Implied Nifty indicating to a flat start. We'll know very shortly as we gear up for pre-open trade, but we'll take a break. We'll come back, so stay tuned.
All right, back with India Market Open right here on NDTV Profit. Now, we're talking about key brokerage names. Today, we've advanced that piece a little bit because it's a very interesting note that UBS has come out with. They've maintained a buy and raised the target, in fact, on Interglobe Aviation. UBS has. Puneet joins in with some details of that note. Puneet, what is the rationale of UBS?
Well, definitely, they've increased the target price from 4,000 previously to 5,400. This prefers an 18% upside from the current levels. Now, what they've said is that, they are seeing continued strength in India's air travel demand and expecting roughly 11 to 17% CAGR in India's travel demand over the next 6 years until FY30. We see that, Indigo's market share gains in the international travel, and UBS see that they're expecting it to maintain this particular gains from over the last few years that they've done it. They have said that, it remains constructive on Indigo's medium-term profitability, which is driven by highly favorable industry structure as well as its market share of upwards of 60%. They're expecting Indigo to generate roughly 13% EBITDA CAGR over the next 3 years until FY27. While short-term profitability impact might be there because of seasonal Q2, this is purely just on how the industry is, and they are expecting a good year for Indigo. Finally, they are seeing that any kind of associated demand would be an ideal buying opportunity in Indigo going forward if there is anything post the Q2 numbers. But they are seeing that, in this particular quarter of first quarter of FY25, it will be yielding compared to, what has been, it might be impacted considering the sharp rise in Air India as well as Vistara's near-term market share. But overall, it's very constructive on Indigo and the strength it brings over the last few years and maintaining it the same. Back to you.
Okay. Interesting. Puneet, thanks. This note speaks about how a quant regression model indicates double-digit growth in Indian air travel. Samina, I remember the new boss of AirAsia mentioned about how ticket rates aren't coming off and travel continues to boom. In fact, there's a Bloomberg story today about how the US flight delay and airport congestion season begins because people will now start traveling left, right, center. So it's pretty interesting what's happening in air travel across the world. I mean, I'm talking to somebody who just did that.
What is the ancillary of air travel? I'm thinking, what are the stocks that or sectors one should be tracking then in that case?
I guess airports come right up there, right? Lounges maybe, and there is a company which does that.
And more airports that are coming up. So maybe the likes of an Adani could be on the radar, largely on back of airport management in that sense.
So airport management, lounges, people who have now stores like Ethos has now stores across airports. So that's the other one. I mean, it could be very interesting to see how that shapes up. But
I think this is why household savings are dropping month on month. It's because of all the travel, and that's obvious in rail numbers, aviation numbers now.
Yeah.
It's all looking good for the sector. Who would have thought?
Pretty good going, really. Aditya Shah, founder at Hercules Advisors Johnson. Aditya, thanks for joining in today. Really appreciate your time, of course. And Aditya, I want to start off that conversation with what me and Samina were talking about and the UBS note on Indigo. They're talking about how it's giving wings to the nation, double-digit growth in Indian air travel ahead, and Indigo could actually do well. They've upped the price target as well. What are your thoughts around this whole pocket, Indigo in particular, but other aviation beneficiaries too?
Good morning, Niraj. Thanks for having me. Indian aviation is on a boom like never before. We've seen Air India plus Indigo having nearly about 1,000 planes on order. And this is the largest order by any country across the world. Indian aviation is set to take off over the next 3 to 5 years, so there's no doubt about it. However, having said that, there's a boom. Stocks have already priced this in, especially Indigo. Indigo now controls about 55 to 60% market share. So out of every 2 flights, 1 flight is out of Indigo, and the stock has already priced in. So I would like investors to have some caution particularly over the stocks of Indigo, because the market cap of the company has risen dramatically over the last 3 to 5 years. So caution on Indigo. However, you can look at other stocks like the hotel stocks or the ancillary stocks as you were suggesting. But the aviation boom is here to stay, and it will stay here for the next 10 years at least.
Oh, well. So high crude prices don't seem to be denting the sentiment very obviously is what we've noticed. Aditya, let's talk about telecom price hikes. We got Sony's view on the technicals of what that means for the sector. But fundamentally, after the tariff hike undertaken by Bharti, Jio and Vodafone, what is the outlook on the stock, impact on the sector, and what's your top pick from the 3 telecom majors? And of course, Indus Towers, I'll add that to the list.
As you've seen, all the telecom players have taken a price hike anywhere between 13 to 25%. This is positive for the entire sector, and especially for Vodafone Idea, who is really struggling with subscriber loss as well as huge mountain of debt that they are trying to service now. So this is really very positive, and this is the first in a series of hikes that will come up over the next 2 to 5 years. So positive on the entire sector. My top pick here would be Reliance. Reliance is the market mover, and Reliance will continue to gain market share away from Vodafone Idea and Airtel. So number one pick here would be Reliance, and then number two pick would be Bharti Airtel. Retail investors are speculating a lot on Vodafone Idea. There's no clear path to how Vodafone Idea will clearly recover from the subscriber loss. The biggest problem for Vodafone Idea, apart from the balance sheet, is that for the last 24 to 36 months, they have been continuously losing subscribers. And if the company continues to lose subscribers, it will not bode well for the revenues of the company. So really very cautious on Vodafone Idea, positive on Bharti Airtel and Reliance.
Bharti Airtel. And certainly in focus, Airtel, because I think, like I was saying, I think Airtel City also saw raise their target. But I must say, for all the fanfare that brokerages have around that stock, because of the pre-positioning maybe and because of the run-up that it's already seen, it's seen a significant pullback. The first trades that happened on Airtel on Friday happened at about 1,500. The stock is 70 points off from there. For a derivative trader who bought in thinking that the price hikes would mean more upsides, is sulking in trade currently. You've got to be careful before going out and taking a trade into these names at the current juncture. So bear that in mind. You know, Sony, I want to come back to you on this because I know you spoke about Airtel pre-market, but here's the deal. A lot of people had bought in preempting this move, right? And the stock had run up ahead of this event. Post-event, it's actually come off a little bit, not dramatically, but off a little bit, 3-4% maybe, 2-3%. What does somebody who's bought this at, say, 1,500 do? Is the stop loss already gone, or should one continue to stay long because you believe there could be a U-turn?
I think it's better just to hold on to the stock and average it out, because 1400, 1410, as I've mentioned, is a good support. So as long as that support is not breaking, one cannot exit at current levels because it's very near to the support. So there's a chance that it actually holds on to the support and bounces back from those levels, considering how the option metrics put writing is taking place at that level, plus the rollovers of the overall sector. So there's a lot of good, positive parameters holding on to the sector and the stock specifically. Just wait for the 1400 support, and if it bounces back, it can retest the higher levels of 1500 odd levels. So I think that's the level to watch out for once again.
While we were rejoicing those order wins on Cochin Shipyard and BEL, we've also got a report from the exchanges where it's Garden Reach that's bagged a significant order, the tune of $21 million. So that could be another significant mover. That's Garden Reach, higher in pre-open trade. A quick check on Amara Raja as well in pre-open trade. That tussle between Morgan Stanley and Nuvama on the brokerage price means the stock is flat. Very confusing signs, but we will, of course, talk about that in a minute. Sony, I want to come back to what was moving last week, and it was Reliance Industries that caught our attention. Over 6% gains for the week, 21 lakh crores of market cap hit on Friday. Does it look like it's in a structural up move, and hence, even if you get gap ups, they should be bought into?
I think the stock has given a breakout after months of consolidation, and the breakout has come above 30.30. So that level is going to definitely hold as a good support. The fresh accumulation zone becomes 30.50, 30.100. That's the level one can restart accumulating. Of course, after this sort of a consolidation breakout that has been seen at a monthly breakout, the stock has a lot of upside move left still, and it can test higher targets of 3200, 3250 as a range. So I think one should hold on to the stock if anybody's already bought at a lower level. Trail stop loss to 30.30, and for fresh entry, 30.50, 3100 level, just accumulate in those levels. Stop loss of 30.30 once again, and it can test higher levels of 3200.
Okay. Bajaj Auto numbers have looked okay actually. I must say two-wheelers were expected to be weak, but Bajaj Auto is doing okay as far as the export numbers go, much better than what the brokerage estimates were, and I think that's why you might well see the stock being flattish to marginally in the green. Remember, two-wheeler stocks largely have come off in the last week, but Bajaj might be an exception to that rule on the back of these numbers at least. Total sales at 3.58 lakh units are up about 5.1%. This is higher than what the estimates were. And the story is there on our website. You can go in and there is a nice graph which tells you everything that you need to know about what's expected out of these different houses or different companies. But Bajaj Auto seems to be doing okay for itself. This will go to Anushi. Aditya, based on these numbers for a Bajaj Auto or expectations of weaker numbers from Hero and TVS or a Royal Enfield actually, not TVS, what do you do with the two-wheeler names?
Niraj, on the OEMs, I'm a little bit positive. My top picks within the OEM space would be TVS Motors at number 1 and then Bajaj Auto at number 2. Both these companies are doing exceptionally well within their space, Bajaj Auto especially on the export side of it. And now my eyes are especially on the EV side of the things for both these companies.
I think we've just lost that, but Aditya seemed to be constructive on the OEMs, two-wheeler OEMs. It's interesting because not all of them are expected to come out with good numbers, but let's wait and watch. Okay, while we speak of autos, auto ancillaries and more, I think as Samina was talking about, there is a Nuvama note on Amara Raja, and that's a stock that was in focus last week. So good to get in Anushi to talk about what is Nuvama have to say with regards to Amara Raja. Anushi, take it away.
Hey, morning Niraj. So now Nuvama has come out with a buy call on Amara Raja with a target price of 2,000, which is an upside of about 20% compared to its earlier price target of about 1,420. Now this is after the company has signed a technical licensing agreement with Gotion, which is the top 10 of the global lithium battery makers over here. Now this will be responsible for supporting in the establishment of the gigafactory and integration with Gotion's global supply chain. Again, this tie-up is an important one for Amara Raja as it would propel its plan for the 16 gigawatt hours of capacity that it has planned out for the next 10 years. So again, focus remains here. Now again, if you have to come to the investment part, Nuvama is ascribing about an unchanged 3x investment value to the lithium battery investments, and now they have raised the fair value of the lithium business to about 1,100 per share compared to 530 rupees per share earlier. So again, Amara Raja buy call here, 20% of an upside that we are looking at from Nuvama.
Well, that's the uptick that we are expecting, maybe more medium term in that sense. The stock, though, not reacting to either of those brokerage reports, just yet trading flat as we see it. Apart from that, you've got a couple of movers in pre-open trade that might be the biggest gainers. So you've got Signature Global that's expected to see a gap up, Cochin Shipyard and Godrej Properties. Sony, you want to come in on and Tata Investment Corp is up 4.5%. So Tata Investment Corp, Signature Global, Cochin Shipyard and Godrej Properties are all expected to see a gap up in trade. Would you buy any of these, Sony, after they see a gap up at 9.15, 9.30?
So, I mean, I cannot comment on Godrej Properties. It's in a restriction list entirely. So, but Tata Investment Corp, I was just looking at the charts. It seems to open above a trend line, sort of a breakout pattern. Intraday basis, there is an immediate resistance of around 6,900 to 7,000 zones. So that level is going to hold a bit of an importance for intraday. If it's able to cross that level, you can see further upside towards 7,500. I think that's going to be a bit important to watch out for. Not a lot of volumes to go by for this stock. However, just watch out for the resistance level. If it's able to cross 6,900, then you can see fresh upside on intraday basis.
Okay, well, Tata Investment and maybe some of the holding companies. Godrej Properties is the other one. We spoke about this possibility, despite the run-up that it has already had, that because there are two reasons. One, the land lease that they did, and two, the MMR sales have looked okay. So good start for that. Had a couple of brokerage notes last week on Godrej Properties as well. No surprise that the stock is doing what it is doing. Aditya, do you like real estate stocks, and does Godrej feature in that list, or are there other names?
Absolutely. We've seen real estate go through a massive consolidation from 2015 to about 2020, and now the sector is breaking out. there are a lot of positives that are happening within the sector. Now you have to go company by company to see what is really happening. My topic within the sector is Godrej Properties. They are doing exceptionally well in Bombay. Their launches in Delhi and their launches in Bangalore are going to provide an upside fillip to the company. So within this space, I like Godrej Properties. I like Oberoi Real Estate and Prestige Estates. Positive on the not only on the real estate OEMs, but on the real estate ancillaries as well. The paint companies, the tile companies, all those companies will also benefit as the real estate sector continues its upcycle.
Well, we've got a minute and a half to go, but Niraj just pointed out to me that Wockhardt is seeing another gap up this morning. It had hit circuit on Friday at 5% higher, and this morning 9.5% on the counter. Sony on the chart 750. If you're buying strength, would you buy it if this is the gap you get on Wockhardt?
I think it's just better to avoid and watch the gap up that is happening today. Of course, the breakout had come, but then the level of the breakout was above 640. So there's a significant gap between 640 to 750, almost 110 points. In case, it can head higher towards 800, but if it gives up the 750 gains, it will come down to fill the gap which has formed today. That gap is towards 690 and 750, so that gap can get filled. I think it's better to just wait and buy on dips towards the support area, 700, 680 range, and keep a stop loss of 640.
Got it. Well, less than 30 seconds to go. Sony, if you had to pick one stock for a trade today, pre-open rates have happened. One stock for trade, which one would that be? 30 seconds.
So I will continue with the trend given in the morning. It is also opening at 5,500 resistance. So I think if it's able to hold on to the resistance, it can head towards 5,600 as the targets mentioned for the day.
Okay. Viewers, so remember, it's also a conditional call in some sense that Sony is saying that it needs to hold that 5,500 level. And if it does, then Sony is comfortable buying it for targets of 5,600. Expensive stock. Has run up quite a bit. Would be interesting to see the Q1 updates as well as they start trickling in. Whether this was a season wherein they saw enhanced sales. They keep on surprising every time. So let's wait and watch. As we speak, Garden Reach Shipbuilders also has gotten a new order. So watch out for that too. But here come the first trades. Flat. And this is on expected lines. Bring up the banks which was sulking last week, at least last Friday. And flat right now as well. So absolutely flat for the markets currently. Bring up the mid-cap and small-cap indices for a brief bit. Let's see if there is some activity there. Nope, not really. Mid-caps flattish, about 0.17% higher. Small-caps 0.4. Okay, some bit of activity. Let's see if this enhances. Bring up the heat map. And you'll probably see Bajaj Auto and some auto names in the list of names there. Yep, Hero, Bajaj, top of the pile. Remember, last week had a very weak performance. A bit of a reversal, maybe on expectations of Bajaj has done, but in Bajaj's case, viewers, it's the CV segment which has driven the growth. Hero may not have that benefit, but both Hero and Bajaj doing well. Bharti Airtel recovering a bit of lost ground, 1% higher. Strength in Reddy's, strength in JSW Steel, Maruti. Essentially, autos seem to be reversing a little bit of those losses. Even Stevens on the gainers and losers. What's losing out? L&T, HDFC Life, Tata Consumer, LTI Mindtree. Consumption seems to be a bit on the back foot. Reliance is flattish to marginally higher. But yeah, that's the long and short of it. Samina, Airtel recovering, Friday's losses, and autos doing well. The top three names on the Nifty are auto movers.
For obvious reasons, right? We did see a big move on tire as well and battery companies over last week. This morning, of course, the day belongs to auto for good reasons and bad. The numbers really, remember, will be trickling in. Niraj mentioned Bajaj Auto. I'll quickly mention Escorts as well. They've seen a decline. Just before that, that's how the broader markets are doing. Slight outperformance coming from the broader markets as compared to the benchmark. So the bias once again moving to the high activity or high volume counters across the broader market universe. Escorts reported numbers that saw a decline. The stock on back of that is seeing a 0.5% cut. So no major decline yet on Escorts, because those numbers don't seem very impressive as we see it just yet. Apart from that, a few stocks that would be moving in the auto pack for reasons that are more brokerage or corporate development related. You've got Amara Raja Batteries. So if you can pull that one up, Nuvama came up with an aggressive buy call on the stock. The stock was up 20% last week. This morning trades flat. Morgan Stanley's downgraded the counter to a target price of 967. So the tussle between Morgan and Nuvama is what's going to keep Amara Raja in a range-bound trade this morning. Order wins for BEL, Cochin Shipyard and Garden Reach. BEL has reported a pretty significant order. The stock is even though the stock is up only about 0.7%. Cochin Shipyard, on the other hand, sees an uptick of 2.5% on back of a significant order win. You've also got Garden Reach. The announcement came in this morning where they've bagged an order worth $21 million, and on back of that, the stock sees a 2.5% up move in trade. The top gainers, though, come from the real estate pack on back of pre-sale numbers. Signature Global, if I can pull that one up, 2.5 to 3% high on Signature Global. Good numbers, 2,700 crores is what they've reported for the Gurgaon project. That counter reacting well to that, 3% gains on that one. Godrej Properties on back of a land acquisition in Pune is seeing an uptake of about 1% in trade. Vodafone Idea followed its peers and hiked its tariffs by 10 to 23%. The stock was down 3.5%. And in fact, the whole sector has reacted with a negative stock movement this morning as well. Vodafone seeing a downtick in terms of stock activity, keeping in line with what its peers are doing in trade. Apart from that, you've got Walker, if you can pull that one up. Remember, the circuit has been revised from 5 to 20%. There was a very positive news flow coming in on Walker on the WCK 5222, on back of which the stock is seeing an additional 12% up move after a 5% uptick it witnessed on Friday. Nearly 12% high on Walker is what we have. Last couple of days, intermittently, what we've seen is holding companies do quite well. So what we saw was on Friday, Bombay Burma and Chola Holding both had a phenomenal run. This morning, Tata Investment Holding is up about 3% in trade. So that's pretty much the market sentiment. It's all about stock-specific trade. But Niraj, no specific trend emerging just yet on this trade. Too early to call it, I guess.
Yeah, too early to call it. Very, very flattish, Samina. You're absolutely right. A couple of stocks, I wonder if they have reacted. ITDC should come up on your screen. As a newspaper report suggested, the government is targeting to seal the Ashok deal by of rupees 7,500 crores, but ITDC hasn't had any major reaction thus far. Let's see if that one does or no. But yep, those are the long and short of some stocks which have done well. Last week's Crystal Integrated up another %. So that's also something that you might want to watch out for. Remember, we spoke to the management and they guided to a very hefty growth target over the course of the next few years. So watch out for Crystal too. Has had a very good rally in the last 10 days. Was consolidating last week. The other one is 361. Had a 12-13% up move, then cooled off and ended the day 5% higher. But starting off about a couple of percentage points higher. So watch out. Lastly, Raymond, 7% higher. Actually, Sony opening thoughts, anything that stands out, and a word on two stocks, Sony, which have had a fabulous Friday and continue to perk up from there. Raymond and KPIT Tech.
I think Raymond, yes, still continuing, still looking quite strong on charts. 30-40 broken above that level and looks a fresh breakout. Can head towards 3,200. One should certainly hold with the trading stop loss of 3,040 and just hold for higher targets of 3,180, 3,200 can be seen. KPIT, I believe that the entire sector is looking at a good momentum. I think the entire technology space is just moving up right now. And KPIT in particular has given a breakout above 1640 on chart. So I think that is going to be a very crucial support. Hold a trailing stop loss of 1640. The stock can test higher levels of 1740 to 1760 for the day.
I just want to pull up 361 WAM, which Niraj alluded to just a minute ago. The stock is looking good in trade, but let's see how it's done for the last 1 week, and that will give you a sign of an indication rather of the kind of very strong gains that 361 has seen in the last 1 week of trade. If you can just pull up the 1 week returns on 361, that should be helpful. There you go. The stock is up 20%. In a week. We don't know about any news trigger on the stock. I'm not sure what's driving it, but there's definitely something going on, or at least the markets seem to be very excited about 361 WAM. Aditya, have you heard anything about what's going on here? I mean, it's consistently been outperforming and turning out to be the top gainer on the Nifty 500 over the last 5 days. Anything that you know on 361 WAM?
No, Samina, unfortunately, I don't have any news, so not be able to comment on this.
Right. On the charts, only 361 WAM and the other 20% in the last 2 days has been walk hard. Both those counters, if you're to initiate fresh buys, would you do so at the CM at current market price?
See, the breakout has come, but then it's quite at a lower level of a breakout. That was around 910, 915, and the stock has moved approx 100 odd points from those levels. Can continue to hold, but trail stop loss to 940 is going to be crucial. If it breaks for 940, it can retest the low support of 910, above which the resistance had come. On a higher side, 1050 is a resistance, so the stock is at a pretty decent level. 940 can be your trailing stop loss. Hold for the targets of 1040. Speaking about Wokhard, we already spoke, and the stock is seen to be holding above the 750 gap up opening that it has seen. Also for intraday, it is going to be important just to trail the stop loss to 740 and hold. The stock can test 810, 820.
Okay, Aditya. While IT is sluggish largely, though has recovered a little bit of lost ground in the recent past, what's with stocks like KPIT? These are not cheap stocks. I mean, KPIT in particular is a very expensive stock. What explains this flurry of activity? And are you constructive here?
So Niraj, KPIT, a company like KPIT, Tata Elxsi, or L&T Technology Services, these companies are product-based companies where they are supplying to the auto sectors, especially KPIT, and the auto sector within the European space and also particularly within India is revving up a little bit. So the market is very hopeful that as the auto sector continues to keep moving up, all these companies will do exceptionally well. Mind you, as you said, neither is KPIT, Tata Elxsi, or LTTS really a cheap stock. So investors should be really very careful on this rally. I expect all of these IT companies to do exceptionally well only in 25 and 26 when the real demand starts to come in as US continues to keep cutting the interest rates.
Sorry,
I was just saying on this one, Samina, it'll be very interesting to see whether they are able to come out and guide to as strong a growth for FY25 as well, because and up the guidance, because they guided to some very strong guidance for FY25 at the end of the year.
Whether they maintain that,
will they up that or maintain that is a very key thing. But the screen is suggesting that something's up and about for KPIT.
I think the screen is also suggesting something's up and about for JB Chemicals. Top gain on the Nifty 500, 10% now on the stock. Again, it's
a brokerage note, right?
A brokerage note on it, 8% now on JB Chemicals at the day's high point. It is turning out to be a top gainer on the street. Followed by that is Garden Reach. So while you had order wins for BAL, Cochin Shipyard and Garden Reach this morning, it is Garden Reach that's moving the best. It's Kotak's buy call note coming in, where they've set that they continue to remain neutral on the sector, but they've hiked the price target of JB Chemicals to 2025. So that's the stock you want to watch for in today's trade. 6.5%, 7% higher already on the screen. So it's already moved 120 points, but 2025 is what it could be a target or by Kotak. That's JB for you. Garden is up 5%. You've got KPIT, Niraj already referred to, but I'm going to quickly add a few more gainers. ION Exchange is another top gainer in terms of trade. Holding companies continue to be the flavor of today's trading day. So Bombay, Burma, Tata Investment Holdings are some of the gainers in today's trade. But IT, and we mentioned this to you this morning, IT stocks were expected to do well. Remember that the inflation data that came in from the US was priced to perfection, indicating and retaining the hopes of a rate cut, or at least one rate cut in the US this year. News flow such as this usually has a positive impact on IT stocks. With a rate cut, the expectation is that the spending by companies will increase. IT spends will go up, and hence you are seeing all the IT stocks doing quite well in trade today. So that's what we have in terms of trading activity. On the sell side, you've got Prestige that is seeing some pressure. Motilal is looking a little weak. Angel One, Act, India Cement is down about 2% in trade. Amara Raja, Vodafone are some of the other losers. Sony, as we start wrapping up this conversation, anything that you've identified in the last 10-12 minutes of trade that could be either on the short or long side for the day?
Samina, it will be on the longer side, and from the technology space, TCS looks to be quite strong at current levels. Although it is on a broader range, you can say it is consolidating, and the fresh breakout will come above 4,000. But there's an option chain breakout for intraday, so 3,900 is the level where it has come. For intraday, 3,880 can be the stop loss. The stock can test higher levels of 3,960, 3,970. That's an intraday trade. For positional, we'll have to wait for the level of 4,000 to cross. Above above 4,000, it can test higher levels of 4150, 4200. That becomes a positional play.
Okay, we'll watch out for these names. Both of you, Aditya and Soni, thank you so much for being with us in the morning and guiding our viewers on some of the key movers in the session. Great to have you this morning, and have a good week ahead.
Thank you.
Thank you.
That's the view from our experts. Time for a short break on the note. The market's just about holding out, but a lot of specific pockets in action. Remember, a lot of conversation around agrochemicals and whether there could be a recovery. We speak to Rajneesh Sarna, Joint MD of PI Industries, on the recent acquisition and more. Stay tuned. Well, PI Industries has made a small acquisition. You could call it a tuck-in acquisition, if you will. Plant Healthcare PLC for about 32.78 million pounds, 350 crore rupees approximately. Has been hailed as an acquisition in the biologic space, which will give it a good foothold. That plus more, because we didn't get a chance to speak to Mr. Rajneesh Sarna post the quarterly numbers. So good to get an FY25 perspective from him. He joins us right now on the show. Mr. Sarna, good having you. Thanks for taking the time out. Could you tell us the rationale for this, and when does it start becoming accretive on the financials for you, this Plant Healthcare PLC acquisition?
Well, this is basically in line with our long-term strategic objective of building a differentiated, portfolio. While we have been working on, chemical innovation, chemical products, but also for last several years, as a long-term strategy, we were keen to build a differentiated portfolio of integrated products. Already we are working on certain technologies in the biological space. We are already doing reasonably well in India in terms of biologicals and growth of biological products. PHC has some unique technologies, particularly in peptides. And we believe that by combining these technologies, we will certainly be able to build a very interesting portfolio going forward. And able to, give sustainable solutions to the growers all over the world.
Okay. You mentioned a plan of a strategy. You've done, if I'm not wrong, some other smaller ones as well. Would you continue to pursue a string of pearls acquisition strategy in key areas, part one? And considering that Q4 and possibly FY24 saw domestic numbers not quite there, how do you expect FY25 to be organically, and could there be some inorganic moves on the domestic side?
Yeah, so you had two questions. Let me try and answer. So one about the acquisition strategy. Yes, I mean, our objectives has been to kind of create newer growth engines in PI while we are doing reasonably well for last, I would say, more than a decade. To sustain the growth momentum, we are building a lot of these growth engines. Like you mentioned, last year we did a few small acquisitions in the pharma space. And there also we started with relatively smaller acquisitions, and now we are building a differentiated CRDMO business model by combining our pharma research facilities to ASM, RSMs, and also having our API manufacturing setup in Europe. Same way we have done now, we have taken initiative in biologicals, and likewise we will continue to look for opportunities in technology areas whereby we can kind of acquire, combine, and also kind of scale up those technologies by combining them with other complementary technologies that we are working. Coming to your other question on domestic, yes, last year was a subdued performance. Overall industry was not able to do great given the agroclimatic conditions and general sentiments that was around the destocking, generic prices, etc. Well, we have I would say a good monsoon forecast this year. Although if I see first 2-3 weeks, the progress is not as expected. Still, I see some shortfall, but it's too early to kind of to kind of conclude anything. We still believe, as the meteorological department also believes, that we have a good monsoon this year. And if that is the case, I strongly believe that we will have a reasonably performance, a great recovery from the last year, how we did in the domestic space. We have a lot of new products that we have commercialized. We have introduced in last 2-3 years. They are doing very well accepted by the farmers. We have a host of new products to be commercialized in coming year. Okay, so yes, if agroclimatic conditions are reasonably good, we should be doing well.
Some notes that I had read post the earnings, which said that the elevated inventory levels in the industry and price pressure from generics might stay for a better part for the next few quarters, and recovery, if any, will only happen in the latter half of FY25. You believe there is a possibility that it could happen earlier as well, given the monsoon?
Well, that commentary is majorly for generic products.
Okay.
Commodities and generics, and as a business model, PI is not so much so in those kind of products. Most of our products are in-licensed products, exclusively being marketed by us in India. And for these kind of products, I'll not say they are absolutely not impacted by the overall sentiment in the market. They do. But, and of course, the agroclimatic conditions also impact their demand as well. But yes, if agroclimatic conditions are reasonably positive, I think we should certainly be doing much better than, the generic product suppliers, because their their markets, their revenues and prospects will surely be continue to get impacted with this overall sentiment that we are seeing on pricing. We have been seeing this not only in India, by the way, for global markets, we are seeing this situation. If you see last year, 2023, even the global market has posted maybe a lower single-digit kind of degrowth, which is only coming mainly because of price and currency, not because of volumes. Volumes have still grown, but only because of pricing, and that too of these generic products, commodities and generics. So yes, I mean, if the agroclimatic situation is better this year, we believe as a company we should be doing reasonably well.
Got it. So the 15% formal guidance bakes in the agro and the generic demand, as well as how people are talking about pyroxasulfone subdued performance. All of that is baked into this 15% number. If anything, there is a chance of you exceeding this 15% number and maybe going back hopefully to your 18 to 20% number as well.
Well, there are many factors, as I just mentioned.
Right.
Just started the monsoon. I mean, we have to very carefully watch how monsoon progresses. The global industry situation also we just talked about that. Yes, yes, this is true that the inventory levels have reduced, coming to a normal level, but still wait and watch is there. And as you will hear, most of these global companies, as they are also kind of giving their commentary, they also believe that next couple of quarters are going to be reasonably tough because of still the kind of destocking, pricing adjustments, etc. are happening in some of these segments and markets. So considering all these aspects is what we had indicated that this year we are targeting to achieve close to 15% kind of growth. Yes, there are certainly some upsides there, but then there are also going to be certain contingencies. And
of course.
Keeping all that in mind is what we had indicated.
Got it. Yeah, I mean, the end user industries guidance numbers haven't looked particularly great. Agree. I'm out of time with you, but I just have one more question, Mr. Sarna, before we let you go. And that's on CapEx intensity. Now, 1,000 crores, decent number. Would you believe that the opportunity exists to up this, or is this a number that you would be happy with looking at the current business landscape? And how do you see this evolving as the year goes by? Because a lot of points around how the Indian growth might continue to look solid even as the global growth kind of tapers off or stagnates.
Yes, so there are many opportunities. I mean, if I look at our domestic business, if I look at our exports, the kind of business pipelines that we have, more than 45-50 projects that we are working in R&D on CSM side. So as this R&D pipeline progresses, obviously we will be keep reviewing, these capex plans as well. Beginning of the year, what we have indicated is basis our current, visibility at that point in time. But we will surely be reviewing, and there could be opportunities where we can expedite some of these projects, and then this spend could be higher than 1,000 crore, but given today's visibility is what we have indicated.
Fair call. Okay, Mr. Sarna, we'll leave it at that. Thank you so much for taking the time out. Congrats on this acquisition. Wish you all the best for many more. Thank you. And viewers, thanks for tuning in to this conversation.
back. You're watching India Market Open, and the markets are in the green after a flat to slightly lower start. We've actually gained from the get-go from 9:15 a.m. this morning. The Nifty at 24,080, Sensex trading higher by 0.3%, Bank Nifty once again in positive territory, IT stocks doing well, and the broader markets outperforming the benchmark in trade. All parameters indicating to the markets trading at a day's high point. Even though the gains aren't significant to say the least, the sentiment on the street is clearly positive. The breadth of the market is strong, and that's what we're going to take heart from, because on Friday you did see the breadth of the market deteriorate quite sharply in the last few minutes of trade. Well, in terms of the VIX, if you can quickly pull that up, that was trading around levels of 15, which largely is comfortable if you're a bull on the street, but the VIX 14.2 is what we have, about 2.8% higher in terms of trade. Stock-specific action, and on the Nifty 50, this focus will remain on auto stocks. So stocks like Bajaj Auto would be seeing a little bit of traction in today's trade, largely on back of the numbers that they've posted. On the Nifty 500 is where the action really sits this morning as well. Your top counter in trade is Emami, which is up 9%, followed by Garden Reach Shipyard on back of a 1,600 odd crore order win. The stock trades the gain of 8.5%. You've got a few more names that are looking good, so I'll quickly take you through what's catching my attention and hand over to Niraj if he's got any more. PB Fintech, Raymond, PVR, Natco, JB Chemicals on back of the Kotak brokerage report, Signature Global on back of pre-sale numbers. ION Exchange is also another one that's doing well. JSW Infrastructure, 361 WAM are some of the other big gainers on the Nifty 500. Walkhard is also added to that list. IT is looking good. Mid-cap IT is in a sweet place this morning. India Cement, so the gainers of last week are seeing profit taking this week. You've got stocks like Prestige, which is looking well last week. Amara Raja, Triveni, Zomato, India Cement, among the other losers on the Nifty 500, Niraj.
Yeah, the brokerage names seem to be a bit soft today because Motilal, Angel One and a few others have come off in trade. So I think that's to be kept in mind. And some of the railway stocks are looking iffy. But what is looking interestingly poised, independent of what's happening to the stocks, is what's happening to autos. And, you know, Puneet Johnson, because we've got a couple of names out thus far. And Puneet, from the looks of it, Bajaj at least seemed to have outperformed, a bit of a surprise there.
Yeah, definitely. So Bajaj, as you rightly said, they have outperformed, but that's more so on the commercial vehicle side of things, where they have the three-wheelers as well. Just going over the numbers very quickly, on an overall basis, it has shown growth of roughly 5%, versus just like, you know, flat estimates by brokerages in this particular month of sales. Exports have just risen by about 0.7%. It's largely flat, which is a key. Could be a slight disappointment by analysts, because we were expecting, you know, some recovery in exports in this particular year after falling 10% last year. Motorcycles just up about a couple of percentage points, but the domestic CV sales is up roughly 16% in this year. Do note that they have the three-wheeler product here, which was largely flat in the last year as well, so not much growth there. So that's a key positive, which is leading to, you know, the recovery in total sales. CV exports is also up 14%. The other one I just want to talk about is also Escorts, which is reported sales are roughly a 2% fall, which is bang in line with estimates from analysts. They have said that, you know, total sales have, you know, fallen, but exports is down roughly 60% in this particular month. But do note that exports as a total share of sales is hardly in the mid-single digits, so not too much. But this is a key negative, because they had said that they will be exporting a lot more in this particular year. Post Q1, this is the last month of sales in Q1, so the commentary on the tractor maker, especially what's happening in Maharashtra, Karnataka and Uttar Pradesh, because these three states are very key, and we have seen very subdued environment here. Mahindra is the leader here, so will be very key to look at what Mahindra sales come out. Passenger vehicles, of course, expected to be very strong, but they are expecting a 20% recovery in this month for Mahindra and Mahindra in the farm equipment side. So very important what kind of commentary they bring in, but these are the two ones which have already reported numbers yet for this particular month. Back to you.
Okay, Puneet, thanks. Puneet, just one quick question. So, is Bajaj's performance, you mentioned, driven by CVs? Does that give any leads into what could happen to a Hero? Because Hero was very excited early morning.
Yeah, that's right. I think some pivot could help Hero going forward, but largely, because we've been putting out the SkyMet IMD data as well, that we are seeing some negativity in this month. So on the brokerage estimates are quite flattish and not expecting too much from Hero. So even a slight positive surprise could lead some pivot in this particular stock. The stock has rallied tremendously over the last 2 months, basis on valuation of how Bajaj and TVS are expensive compared to a Hero. Brokerage is also positive. MK has a target price of roughly 6,000 per share. But just some positive news on Hero sales this month or post Q1 as well will be one of the key positives.
Okay. Keep a keen eye out for some of these. Puneet, thanks. It's been a busy morning for you, I know, but thanks so much for putting this into perspective. That's autos for you. What else? It's interesting. PB Fintech must be at record highs, if I'm not wrong, for this stock. 1468, 5% up and counting. For all the fanfare around Zomato, and rightfully so, PB Fintech hasn't had a bad year, must say, the last 12 months. About 100% uptick for that stock. Again, a platform business, and from the same stable, right? InfoEdge has invested in PB Fintech in addition to Zomato. Individually run companies, of course, but yep, interesting there for what's happening there. There is some strength in Uno Minda. We're talking about auto ancillaries doing well. So Uno Minda is right up there, up about 4.5% to 5%. Not every other company has done well. So tires, which were doing very well the whole of last week, wonder if they've stabilized a little bit today, because Friday had a big fanfare for the tire names. So JK, MRF, Apollo, etc. JK is still in the green. I wonder if MRF and Apollo are trading okay, flattish currently. So they're not as much, but certainly some of the other tire names have done okay for themselves. The other pocket to monitor, of course, are some of the city gas distributors. Remember in Friday's session, both IGL and MGL had a big price and volume breakout. In today's session, MGL, after starting off and perking up early morning trade, just cooled off a little bit. IGL should also come up on your screen. Again, the same statistic, started off very well and has cooled off a little bit. So keep an eye out for both of these. Gujarat Gas was flattish last week, and I wonder, or even in Friday's session, and I wonder if there's a bit of an uptick that has come into Gujarat Gas. No, not really. That one too is lying absolutely flat. We'll get in SkyMet in moments from now, but before we do that, I just want to highlight for our viewers the brokerage view on Interglobe Aviation, because there are two brokerages which have come out with their notes today on Indigo. Remember, post the block deal, the stock came off a little bit. In today's session is up about 1%, and both UBS and Kotak are very constructive on Interglobe. So keep an eye out for this one. Okay, now what we hear this morning is that the June rainfall is below estimates. Mr. GP Sharma of SkyMet joins in right now to tell us about what could this mean. Mr. Sharma, is this a cause for worry? Good morning.
Not exactly. You see, if you just look back, SkyMet had given the forecast, comprehensive forecast, which we gave in the month of April, and we did say that the June is not going to be good. Actually, it's going to be a little aberrated. The lowest rainfall which we have given from the SkyMet for the monsoon season, that is in the month of June. It was on the expected line, I will say. Okay, though last few days, actually there was some decent rains and it has recovered. Otherwise, the deficiency had gone to as much as even 20%. Okay, good that 3 days of last 3 days of rains, and it has dropped now to 11%, still below normal. Okay, but it is on the expected line. But I don't think it's a question of worry at the moment, because we expect that the situation will improve, particularly the core monsoon months. They carry a lot of weight, July as well as August, July being the rainiest month of the monsoon season, and carrying almost about 33% of the share of the season as such. July, August put together, they carry about 66% share for the monsoon rainfall as such. But I expect the situation to improve. It'll become better. Monsoon has covered almost the entire country now. It had given us jitters. Surely in the first 2-3 weeks, it was terrible. But then it has improved, and another 2 days you will find the monsoon even reaching the farthermost coast of West Rajasthan, adjoining area.
Right.
And thereafter we can expect some good rainfall. Yeah.
So Mr. Sharma, not a concern thus far. Does monsoon, to your estimates for the month of July, will be above estimates, or could it be in line? Or is there a possibility that monsoon may really recover all of the lost ground that we've thus far lost in July itself?
The deficit, more the deficit, obviously it becomes difficult to catch up. 11% is some figure, okay, but then July has got a lot of potential. It is, as I said, the rainiest month as such. And then most of the aberrations which take place during the monsoon season, you call it as a monsoon breaks, etc. July is not favored for that. Mostly those happen in August. I expect July to behave well. If not a catch-up of the deficiency in the month of June, but at least on its own it should be good, and it should possibly may recover also whatever deficit we have in the month of June, partially at least. Okay. So the worry definitely at the moment is there is almost about 45% of area of the country which is deficit. Large deficit being the eastern parts of the country, even western parts, northern parts, which didn't see rain for quite some time. So deficit is very large. 45% is a large figure. Okay, so that's what I said. I'm a little apprehensive that complete deficit will get covered or not. But then surely July promises a good month.
Could we be staring, Mr. Sharma, at a below normal monsoon for the season if indeed the deficit and the area under deficit is so large at the end of June? Overall?
No, not exactly. Not exactly. As I said, July and August, we bank upon
will recover. Okay,
and
fine.
Particularly, we are worried little core monsoon rain-fed zones. They are more crucial, and I think they will recover. Yeah.
Got it. Mr. Sharma, but thank you so much for laying it out as is. This 45% deficit area, 11% number is all concerning. Hopefully, July and August make up for it. Thanks for putting this into perspective.
Thank you.
That's the view from SkyMet. Remember, viewers, what Mr. Sharma is effectively saying, that July will be a wet month, and maybe that is welcome. Not maybe, certainly welcome. Okay, we end India market open on the note that the markets are actually doing reasonably okay, about 1/3% in the green, and IT is leading the way with another 0.8% uptick, if I'm not wrong. Are we 0.8% higher? Yes, indeed. But banks too about 1/3%, so not bad really for the two heavyweight indices. More on the markets and a global perspective really with our next guest on Talking Point. Gautam Chowchare of UBS joins in. Stay tuned.